A wonderful good morning, everybody, and welcome to this week's episode of Satoshi Secrets, where you see a very happy Jonathan who has joined me again and me with a big smile because we still cannot quite believe like how fast things are currently moving in the cryptocurrency markets.
It's amazing.
It's just plainly crazy, but this is what Bitcoin does every now and then. And I remember us just talking about this also last week when we were obviously already very happy because we had new all-time highs. And yeah, today we want to take, of course, the opportunity to discuss quite a lot of things. Obviously, we're going to talk about Bitcoin or cryptocurrencies in general, what to expect now, how to behave, and all the things that come with that. And secondly, I would like to especially also touch base again on this awesome idea you had last week, where you said, like, I think this is good to short euro dollar. For me specifically, so interesting because it's the kind of the way I like to analyze trades because I'm come from a fundamental background very often, and like this is normally my chain of thought, and I've seen this actually really for the first time applied to reality by you, so that it was like super fascinating for you because normally you are a technical trader, but you coming from a more fundamental view and really absolutely nailing that trade. Thirdly, at least from my side, I have a little story to share with you when it comes to trying to cash out your cryptocurrencies on exchange. I had a very bad experience still having it with one of the cryptocurrency exchanges, which I want to tell you about later. And I also want to give you some tips, obviously, how you can avoid kind of the shenanigans that I'm going through with this. Is quite everybody I'm telling the story, they cannot believe it. It's so
It's
crazy.
amazing.
All right, but I think maybe we go first into the charts. I'm just going to jump ahead here, and no, that's not the chart I want to share. Have a look. Really, I mean, this one says it all, and it's in my opinion, also like from a technical standpoint, again, a chart you probably could show in a book when you write about technical analysis and you want to give examples, why it can help you to make better informed trading decisions, because it's really like really classical chart book. What we saw here, we had these local tops here, basically since March, where we try to overcome again and again and again. As a matter of fact, we had this I want to call it mini bear market, with declining rates, lower lows, lower highs. And Jonathan, I have been saying, we, in order really to see a change in structure, we need to see a new all-time high, which obviously was something that happened last week during the election night in the USA. And yeah, it's really textbook how sometimes it can be a great strategy to just wait until something significantly happens on the market that changes the market structure. Really a lesson in being patient if you just want to trade it, from a technical point of view. From a fundamental point of view, we've talked about excessively, obviously, as well in the last, really months. It's a whole different story. Yeah, the question now, of course, is, what is going to happen now? I named this. Are we going to see like 100K already next week? I mean, today we're Friday, so I'm assuming next week. Although the last super big move was, I think, last Sunday, also where things suddenly went nuts. And I can see a lot of FOMO again on social media. I can see a lot of FOMO also already starting to form, for example, on Google. The search trends for Bitcoin are massively up on Google, which is something we haven't had in a very long time also. And from your point of view, Jonathan, if you are somebody, like maybe new to trade, maybe not new to trade. Let's not start like with the absolute beginner, but somebody who's now thinking, damn, I missed the train a little bit on this. Like, how do I get into this now? How do I behave? I don't want to fall for FOMO. I still want to keep a clear head, of course, with the risk that I continue to miss the train. I mean, that's almost always the case when markets are doing what they are doing at the moment. Do you have like any insights for our viewership, maybe?
Yeah, definitely. But I wanted first, to thank you for that comment on the EURUSD trade. And I just want to comment that for a minute. And you said that we had, because you
You want to show it maybe again? Also.
Yeah, maybe I can show it and then kind of walk you guys through the overall idea. Now, what's actually quite interesting here is so last Friday we had the live stream on the 8th, last Friday around this time, and this was when I entered that Euro USD short. Now I've actually managed to catch the very bottom, so this is where I exited this one. I've scaled into this one, biggest position up here, and scaled to it, and I actually exited everything right now before the live stream right here. Now this means that I actually caught a 250 pip move to the downside on EU
within a week. That's amazing. And on Forex, you know.
that's like you look at the percentages. It's 2.36%. It's almost like, I mean, trading the Forex market, trading stock market with leverage, this would actually be a type of percentage move that you would see in the equities market. This does not happen very often in Forex.
I want to put this into context already, because we are so moved now. We are so used to those crazy percentage move in cryptocurrencies. Also, Forex nowadays is much more volatile. When I started as a Forex trader, like Forex, I changed to Forex, I think like 15 years ago seems about right. Yeah, about 15 years ago, we were used to having like moves of 0.1% or something, or 0 per week. That is, so the volatility has increased as well. That's why it's, from a standpoint of a Forex trader, amazing to catch within a week a move of 250 pips.
Yeah, it doesn't happen very often. And the important thing here, and then also if I look at my personal trading capital, so this year has not been great. But I've made, so looking at the whole year in trading, I made everything that I've lost this year. I've made all of that back this week, plus more. So all my profits through the whole week, through the whole year, came in this week right here with this trade. And that kind of goes back to something that I like to talk about a lot is looking at my long-term profitability, and the way I make money is there's maybe 2 or 3 times in a year where everything is aligned, everything clicks, and you have that feeling where it's like, okay, my bias is playing out, the move is happening, everything is just so very clear, and I'm just going to be adding to this position, taking profits on the old positions, adding more to the position, and just making money on that move. And that happens, 2 or 3 times a year, and that's when I make all of my money. And this is one of those scenarios where the idea is just crystal clear, that I have the most conviction to just keep adding risk on the move as I see it materializing. And I wanted to walk you through this. And first of all, so you said, normally I'm trading only technicals, which I am, but and one of the reasons why I'm only trading technicals is because this year I've seen that the Forex market has just been, it's been very, like, we haven't had a clear direction, I feel like. And I feel now, for the first time in a very long time, I have the feeling that the market might come back to being directional with in a whole different sense. And so about 2 or 3 years ago, I did focus more on fundamentals, but I feel like now that there's different market cycles. So I want to be focusing much more on fundamentals. And for those of you watching here, if you're watching this on my YouTube channel or Dirk, I have Dirk's channel in the description of my video. And I've also opened a new Telegram channel where I post all of this analysis, like all my analysis and all the trades I'm taking is being posted in a Telegram channel, because I kind of like the compact idea of Telegram, is having everything in one place. So if you want to follow along with this after the live stream, make sure you join that Telegram. But anyway, the overall idea here is...
You should give me the address, and I can put it in the description of the video also.
Yeah, I will do that. Maybe I should do that now.
Do that now, then you can continue to explain, and I'll put it in there for you. So you guys, if you're watching this live right now, you can join the channel. That is already. Okay, you continue. I'm going to mute myself for a little while.
So we go back. So this is a chart overlaying the dollar currency index with the S&P 500, and I can't remember what made me realize this. So this is what I love about this as well, is this is an original idea. Now sometimes you have ideas from other people, from other doing research and stuff like that, but it just came to me, and it's those ideas that I really like. I went back and I looked at the S&P 500 on the last time Donald Trump won the election. And I thought, you know what, this is an interesting development, from the red is the S&P 500. And I thought this is an interesting development. And I looked at this and I said, you know what, if the S&P 500 is rallying so powerfully after Trump getting elected, then the US dollar must go down. So maybe there's a trade here to short the dollar. So I put the dollar currency index on and I'm like, wait a minute, they're correlated. This makes no sense because risk on assets and US dollar are most of the time not correlated. And I thought, okay, so where does the correlation break? Well, it breaks around after this time period here is where the correlation breaks. Because if you go forward, now you see that it's just a cross on the chart. It's just a big cross, which means one asset is going down, the other one is going up. Is an inverse correlation. This is the normal state of the risk on and risk off environment. But between this time and this time, they're correlated, they're positive correlated, which means from the date of the elections to inauguration. Now, inauguration in America is when the president officially, the president-elect becomes the president and gets into the White House, basically. And that happens on the 20th of January. So the idea here is, okay, I want to make sure that I'm capitalizing on this opportunity that we'll probably see, but I want some confirmation first. So when we go back to current date, this is the election right here. And this is inauguration. What are we seeing here? I would say we're seeing a perfect confluence. The same thing as we saw last time. We are even seeing a dip on the dollar currency index right now as we're hitting resistance. And that's also a dip on the S&P 500. And if you look at Bitcoin, it's a dip on Bitcoin as well. So we are seeing a positive correlation here. Now, it is important to note, though, that I can't stay 250 pip move on EURUSD. I'm not going to be greedy here. I'm not going to I'm taking profits on this. I'm not going to be greedy, but there is still more money to be made here. Look, we're not even halfway through the inauguration. I think that this relationship will continue. So if we look at the dollar currency index, the idea I had was starting to materialize, around this time, where the dollar currency index had reclaimed range EQ and started moving higher. And that's when I went short EU, because EU and the dollar currency index is pretty much the same chart. We can overlay EU here, and you can see what I'm saying, because the dollar currency index is a basket of currencies, which is about 60% or 57% something is EURUSD. So if I add this to here, you will see that it's pretty much the same chart. It's just almost perfectly inverse correlated. So, but I can't trade the dollar currency index. With the fibers, I'm not sure I can trade it. And if I could trade it, the spreads and the slippage on dollar currency index, it's going to be much worse than EURUSD, because EURUSD is the most traded asset in the world that has the most liquidity in any markets, I believe, at least in the forex market. But it's a massive market, EURUSD. So that's the
most liquid asset in the world.
Yeah, it's amazing. So the spread with the fibers on this one is like 0, and commissions, and the slippage is low. So
plus also the trade direction. You are shorting euro, so you are selling euro, buying US dollar. That means the interest rate also is in your direction, because we have higher interest rates still in the USA that we have in VU. I don't know about the fibers, but you might get actually a positive swap overnight financing also, where you get a little bit of money.
I did get positive financing on Oanda. Not sure if I got that on the fibers though, because I'm not.
Yeah,
sure
I know Oanda is very, very fair with giving. Some brokers are very greedy and keeping everything for.
Oanda is very fair with the financing, but they're terrible with slippage. It's absolutely
and spread.
Amazing.
It's like 2.4 pips or something.
Yeah, wow. I had I saw one of my students in the Discord. He got slipped overnight on like 30 pips on Rwanda on the GBP AUD or something like that.
Yeah,
Like
that
30
cannot be
pips,
really.
like that.
That's
That's
somebody stop
that's not
hunting there.
possible. Yeah, that's not possible. So anyway, so the dollar currency index is now, it moved from, basically the trade was, moving from range EQ to range high, and that resulted in the move on Euro USD. And now, of course, the dollar currency index is reaching the highs here, which I expect the dollar currency index to retrace, which obviously means a retrace. And that's exactly what we're seeing on Euro USD here. We're breaking the low time frame structure right here. We have a higher low. We have a nice double bottom structure here. This is just an absolutely perfect bottom formation, especially if you come up and reclaim that level. Then I think Euro USD will move higher. But I see this as a potential to maybe add to a short up in this region. Because if the correlation between the dollar currency index and the S&P 500 strength, I believe that we're going to get a pullback on everything. In the risk asset, we're going to get a pullback on the S&P 500, the US equity market. We're going to get a pullback on Bitcoin, and I'm going to look to enter a new short here. I also had long on USD CHF, which I'm going to look to enter extra position on that as well, on the pullback, because look, this range to me is just absolutely beautiful, and USD CHF have followed this trajectory that I've been planning for quite a while, and I believe that it might actually break out and reach the range highs of this range. So this is a trade where I'm trading dollar strength on both of these assets. And then I wanted to show you gold. Now I wanted to show you gold for two different reasons here, because it's a beautiful break of structure here. And I'm also going to show you what I believe is one of the most beautiful ascending triangles I've ever seen here. But I want to show you this. So you have a trend that is quite heavily accelerating. You can see by the what I like, I'm not sure what they're called, but parabolic trend lines or whatever. You have one trend line here, and one here, and you see that they're becoming steeper and steeper and steeper. The incline is becoming the moves are faster, and the incline of the trend lines is becoming steeper and steeper. It breaks here. That would be like the first sign of the parabolic move losing momentum, and then you have another strong breakout, and here you actually have a head and shoulders pattern with a break and the retest of the neckline of the head and shoulders, and that is breaking the trend. Now, this obviously aligns with the changes in sentiment, because gold has been rallying quite nicely in the last market sentiment that we had prior to Trump, and then when Trump came into office, we saw the gold breaking lower here. So I wanted to make sure that I'm getting in on that move.
But I think this is also mainly due to the US dollar gaining strength so much at the moment. Yeah.
Yeah, I'm having some issues understanding the direct correlation between dollar strength and gold weakness.
Well,
I guess.
No, you have if you just say like the gold price. Can I say it like this? If the US dollar becomes stronger, it means. And at the same time, you don't have a change in sentiment, for example, for gold. That means still the price of gold dollar is going down. You have to pay less US dollar per ounce of gold because the US dollar is becoming stronger. I think this is the move we are saying here. Of course, this is like added here to also that the sentiment itself of gold is changing to the worse at the moment. So it's adding onto the US dollar strength. Also, that's why you see quite those significant moves down in gold, in my opinion. I mean, we came from 2,750 all the way down to 2,550, which is a large move.
And from a fundamental point of view, also, I read some news about looking at the Indian jewelry market and the luxury market. It did see that there's a pretty sharp decline in sales of gold jewelry and things like that, and that coincided with the top in gold. So that's also interesting to note that there might be a correlation between that as well. But I actually made most of the money I made on this gold short. This is where I didn't make most of the money on EU. I made it on this gold short. So this is and what I love about this way of trading is the fact that there's a marriage between fundamental analysis and technical analysis. And I feel like as a swing trader, I've been lacking. And now, of course, most of these trades could have been found using technical analysis. But the thing that made me most money is adding to the position. And that could not have been done using only technical analysis, because the entry and everything, that I applied technical analysis to that. But when adding to the position, I basically, as soon as the CPI number came out, I added. As soon as the unemployment numbers came out, and I added to the position, you know? So, and of course, there was some level of technicals. I mean, if you look at EURUSD, for example, when we broke this level to the downside, I added a small position, right? So there's some technicals, but I would never have used, this is a breakout trade entering here. I would never have taken that trade only based on technicals, because I'm not a breakout trader. But now I have a bias in mind. I see the numbers come out from the unemployment data, and I add the CPI to that. And then also yesterday, Powell was speaking, and that's when you had this move. And I'm thinking, you know what? Powell is going to speak, and he's just probably going to say the things that we already know based on the numbers that have already been released. So I shorted that move up here, which also turned out to be some profit. So having a good idea of what the fundamentals are and what releases and how it's going to move the market is super potent to know.
That's the thing always, like the story moving the markets are always the fundamentals. Like the technical analysis is then kind of a catalyst where you see that translated into price action, by the way. This is why, like, a good friend of mine always says, technical analysis sometimes is like a one-dimensional solution for a multi-dimensional problem. And at least the second dimension added to it is the understanding what is fundamentally going on. Why did euro dollar fall? Why did the US dollar gain strength? Because it seems like the market participants are a little bit afraid of all the stuff with the tariffs coming from Donald Trump. We discussed about this last week. I read quite a lot since last week when we started discussing about it as well. And this is basically what's going on when you have Jerome Powell coming in saying, like, we had inflation at 2.3% coming in. We don't see the necessity at the moment, but we need to speed up our interest rate cycle to the downside again. Still, we have market participants expecting in the last December meeting of the Fed to lower interest rates by 25 basis points once more to 4.25 to 4.5%. Then it's going to be the ratio then. And all of this you see then, like Jonathan just so beautifully explained here, translating into price action, really. And so this is where it all comes together. But I agree very much with you. My most profitable trades are always also the ones where I come to a conviction based off something fundamental, and then I see it playing out on the technical level. And this is rightfully done. So this is when you add to the position, because suddenly it's crystal clear to you what is happening there. And it's always funny after that, if you ask somebody, like, or somebody comes to you, oh my God, did you see this euro dollar going down? How was that? And you say, like, yeah, sorry, but for me, it was very clear. Yeah, how come it was clear for you?
Exactly,
I got caught on the wrong side. And then it's like saying, like, oh yeah, maybe I have my biased glasses. I'm wearing my biased glasses for this type of trade.
That's so interesting.
Right now. But it's happening, and it doesn't happen so often, especially on a shorter time frame. So when that happens, you really have to put your money where your mouth is. And this is how you earn money. And this is what happens to me also over and over again. I have long periods, I'm talking about swing trading now, not talking maybe also about my long-term position, long periods where nothing really happens. We just saw that on Bitcoin. It was basically since March, nothing really happened, bought a little bit now and then again when we were at 55,000, 54,000. But overall, nothing much happened. And then suddenly, bang, it breaks out. And we are like sitting here saying like, yeah, this is what we've been talking about for such a long time now. Now it's happening, and it's crystal clear for us.
And this
I
is
think we
also
have a question here for you. Let me just quickly from
so adding to positions allowed in the Fiverr? Yeah, I mean, adding to position just basically means taking an extra trade on that position, adding to that position. So I don't believe there would be any problems at all with adding to a position. And I'm looking to enter a possible short again. Yes, on the pullback on pullback. Yeah, it's a pullback. Yeah, I'm thinking like pullback or retrace, but yeah, it's a pullback. Okay, so like I said, if you look at the euro here, you can see that if we apply, just a simple market structure analysis here, we do see that the euro has come down, hit a low here. And if we zoom out, we go to the weekly, we see that this is a very, very obvious support, right? And it's also the resistance on the dollar currency index. So what I'm thinking is I'm looking to potentially enter on that retest here because we broke that level and we haven't really retested that level. So this is a great level to enter a short again if the fundamental bias still aligns. If the dollar currency index and the S&P 500 is still positively correlated, and we're not seeing a, as long as the fundamental bias doesn't change, we're on the same track as we are right now, then I would be looking to enter a short here, and of course look for some technical confluence with that entry. My yen trades, I'm not in any yen. I'm not in any trades now. I've exited all my positions. I'm not in any positions now. But I wanted to go back to gold here and show you this. Just sometimes, sometimes technical analysis really does work. Now, here's a ascending triangle. Now, I'm not really, but I'm trading price action. I'm doing technical analysis. When I see something like this, it's just a beautiful example. So you have the ascending triangle. Now this is the when you have an ascending triangle like this, a downtrend moves into like this, and a break to the upside is usually more profitable because this is a really good bottom formation and a reversal pattern. So when there's a break to the upside, it's usually quite profitable, but there's a bigger probability of seeing a break to the downside. And the way you trade the ascending triangle is you want confirmation on the breakout. And one type of way to look at the confirmation of the breakout is you can look at volume, and especially volume when price is approaching the level and breaking out. And you can see, of course, that there's a very big increase in volume right here and on this whole move that we have here. So that confirms that breakout, the increase in volume. And then, of course, you have multiple candles below, and then you have that retest of the trend line. So the way you want to trade this is you want to have your entry on the retest of the breakout level or that trend line. And now a lot of people will probably look at this as the breakout level. Now that would obviously not be a trade because the trend line comes before that horizontal. And then I want to have the stop loss above the high or the resistance of the triangle. And then what you want to do is to look for a profit target on this one. And for a profit target on this one, you want to look at the height of the triangle. You look at where the first low to the first high or the higher high, and you take that and you double that. So from entry right here, and that's going to be your entry and TP. Now, this is a pattern on gold that I would not be surprised if you might read future books on technical analysis where this might be an example, because there are no better example of an extended triangle like this one that we printed on gold. And I actually traded this. I remember trading this live on the Fiverr Live trading room. So sometimes having a good understanding of technical analysis can really, really help you analyzing charts. Because if you have, so for this one, for example, the reason I took this trade was because I had that fundamental bias. I thought that gold is going to continue lower. Without that, I would never trade a pattern like this, because I don't believe, I haven't back tested this particular pattern, but with the fundamental bias thinking, okay, price is going to go down. What better way than to enter gold on this type of breakout? But I think let's talk about Bitcoin. I think that's what that's what people want to talk about.
Right. By the way, can you hear these banjo alarm messages in the background here from me?
Nope.
Okay, good. Then I wasn't sure if because those are alarms from TradingView, if they are also broadcasted to the channel. All right,
Nice.
yeah. Oh, you already brought on the most important chart, the Bitcoin logarithmic regression. Nonetheless, let me maybe quickly switch back to mine here, which is basically the same chart. And I think we need to adjust this a little bit. That's easier to see. Then you guys can see the whole chart. So let's go like this. Yeah, I mean, we have been seeing now here what we've been talking about for such a long time. And I've been saying this over and over again, that probably this frenzy bull market phase that we are actually in the beginnings, I believe, right now, is going to start somewhere here between November and February of 2024 and February of 2025. It started, as it seems now, earlier. Actually, by definition, the real frenzy only starts when we break out, when we break over this green channel, which is still some way, which is currently somewhere around 102, 103,000 US dollars. That's why it's very interesting to see, are we maybe going to see already, Bitcoin trying to hit 100,000 no, maybe not this week anymore, only have 2.5 days left, and next week. And we saw it can be very fast. I mean, we basically like pierced through the 70s and 80s like through a piece of molten butter, and there was not that much resistance. We are seeing a little bit of resistance now over 90. I think 94.5 was the peak. So I personally also wouldn't be surprised, to see a little bit of action first to the downside again. We've seen that already here in 2016, for example, where we also were about to exit here the green channel, then went down again, then had a second try, and it took us until the third try to really break out. Obviously, I don't know, is it going to be the same this way again? This time is going to be different. Are we not going to break out as well? There are a lot of possibilities. As I said, I'm expecting it to break out. A contra indication for sure would be if we suddenly see here the MVRVZ score going somewhere to, let's say, like 5.5 or 6, but that's also still some way that doesn't happen from now until tomorrow. I think we probably would need to see at least like another $30,000, $40,000 a move from this point. Now, immediately, I mean, in order for this to happen. Now, nonetheless, I was like looking at my charts actually end of last week already, when we and on Sunday, and when we saw those large moves up, I thought, like, I think it's like short term at least overheating a little bit to the upside right now. I wouldn't be surprised to see something like a pullback of 10, 15, maybe 20%. So I thought, like, I've been accumulating quite a number of Bitcoin over the years, and I have like a little stash in hyphens that I have from a work contract that I was in with a cryptocurrency exchange for a couple of years until November last year. That was where I almost never spent. I got my salary there in Bitcoin and never spent it, because I have my income from my other businesses. I have my income from trading. And so I accumulated it, and over what was it, like 2 years or 2.5 years, actually, I was 3 years almost, I was there. I accumulated around 3 Bitcoin through this. So I thought last week, I have a startup which I would like to invest in. I'm going to sell those 3 Bitcoin now and use this to fund the startup. So we're talking about at that point, like $250,000 here. So what did I do? I, of course, said I want to use the exchange I'm trusting for this, that I've been using for 6 years, where I had large amounts of money going in and out already. And so I sent them there, and then they suddenly blocked my account. Said like, oh, we don't believe that is your money. We want to see proof of funds from you. So, what did I do? I said, okay, this is how it is, guys. I accumulated these from a work contract. I sent them the work contract. And then they said, yeah, but the document cannot be older than 90 days. So I said, yeah, but who has a work contract that's dated like 90 days ago? I think it's more valuable if it's dated like a long way back, because it shows the person has been working there for a long time. And so I said, that doesn't make any sense, And then they wrote back to me, which is very interesting. Well, then you have to show us that you have like 250K sitting on a saving account somewhere. To which I replied, first of all, what does that have to do with the Bitcoins I just sent you, which I accumulated over time? And second of all, as a business person, you usually don't keep these amounts of money somewhere at the saving accounts, because you want your money to work. So of course it's invested in companies, it's invested in real estate, it's invested in stocks, it's invested in Bitcoins, as I laid out over the last years. And this has been going interestingly back and forth now for almost a week. And it showed to me that even if you have worked with a credible exchange for a long period of time, I've worked with this exchange, I think, for 8 years now. It still doesn't protect you from the exchange wanting to, I'm not want to say wanting to scam you, but throwing sticks between your legs and making your life difficult. And I'm sharing the story now because actually I want this for you to be a warning. I'm not saying now my money is gone. I still believe, they are just doing their KYC things, but they set them up in a stupid way that doesn't make any sense, because they don't account for the fact that some people accumulate Bitcoin over a long period of time, like by DCAing, for example. And somehow they seem to be under the impression, or if somebody buys Bitcoin, it's always with a lump sum. So it should be easy, to show that you had this kind of money sitting somewhere on an account, or still have, which of course is far, far away from reality. So you have to kind of protect yourself against that. I'm not going to share the name of the exchange now because it's still ongoing with them. Should there arise a legal battle really out of this, what is going on with the exchange, I'm actually going to make a dedicated video about this, because I'm a friend of name and shame then, because probably a lot of other clients would be affected by something like this as well. I guess I'm not the only one, that happened. Actually, I read on Reddit and so on, other people's complaining exactly about the same thing. Now, this particular exchange is regulated in Germany. So this is also, of course, part of the reason why I'm trusting them normally. And in that video, I also would lay out then, if something like this happens to you, and it's not some kind of weird offshore exchange, sitting on the Seychelles or whatever, where you basically don't have any legal pressure. What are the ways you can kind of choose to put the law on your side and to get your righteous money back? And I mean, we've seen Bitcoin being volatile. So far, actually, being forced hodled on those 3 Bitcoins hasn't been bad for me because the price has been going further up right now. But imagine doing something like this, and then suddenly the price goes down by 20 or 30 or 40%. We've seen. I think you would be very sad, and after accumulating for such a long time, then suddenly being not able to cash out because of some weird compliance rules by exchanges is very, very weird. Don't get me wrong now. Of course, there needs to be compliance. If you want to cash out, if you want to convert some of your winnings to fiat, there needs to be compliance in place, and it just makes sense that the exchange wants to see, hey, you are actually really the owner of those Bitcoin you want to sell or other cryptocurrencies. And we want to see, does this amount of money match your your finances. If you're somebody who is unemployed, for example, and suddenly you want to cash out 5 million euro in Bitcoin, I mean, you have to expect that the alarms come on there. If you can then prove, hey, I've been buying this like from my pocket money since 2011, basically, and now I want to reap the reward, it's something else. So yeah, I will on my channel, on our live stream here, continue to update you on the outcome of this. And should this really result in that I get the feeling that something is fishy there, because we always thought like FTX is a valid exchange as well, until it wasn't anymore. And
that's the problem, that's the big problem, because the exchange that you're talking about is a big exchange. It's not a random exchange. So
still not going to name it here. This is like I want to give them the chance, to do everything correctly. So that would not be fair. But should that be the case, rest assured, I'm going to do a very detailed video documentation on that. And if it's just, for the purpose of protecting other people about this. And I'm lucky that I'm in the good position where I said this was meant to be a different investment. Well, it sucks, of course, for the startup I wanted to invest in then right now. But imagine, you are like, this really is like your life savings. You're trying to cash out after saving up for a very long time, and then something like this happens to you, that potentially somebody seems to be running away with your money.
But are you? I mean, that would be insane. But are you able to are you able to sell the Bitcoin on the platform?
No, they locked them up. So I don't have access to them. They are locked up. I can.
They're locked. You can't even withdraw them.
I can withdraw. I can do anything. This is. I actually told them today. I said like, okay, guys, there are two ways this can go now. I give you time until Monday morning, 10 a.m. Berlin time, and you can either send me the Bitcoin back. Then fine. Then you don't want that business. Then I'm going to a different exchange with this, or you can allow me to access the Bitcoin. If you don't do either of both, I'm going to issue a formal complaint with the BaFin, which is the German regulator, which is a big, big thing for an exchange to happen, really. Normally, they want to avoid this under all circumstances, and then it has to go the way, over lawyers requesting in a formal way the release of the money. But of course, these are things that can go on for a long time. And of course, I said also, should we see like the price of Bitcoin going below the moment where I deposited those Bitcoin onto your exchange, I'm going to sue you for damages as well. And I don't like to do that, obviously, because I know 95% chance there's just some stupid process they have been implementing.
Of course it is. I mean, the regulatory environment is just it's probably is a bureaucratic nightmare. I mean,
exactly. Yeah.
I mean, I've been in similar situations like this one where you're getting like messages. I'm like, wait, do you okay? So you want, like, sometimes they ask for like, okay, give me like bank account details, like utility bills, you got your passport, like what more do you want? You have everything. Like, do you want me like pictures of myself naked? Like it's so it's just insane. It's just insane. I feel like it's just crazy. They want like all types of information, and then when you give it to them, they want more information, and then they want more information, and it's like, okay, so it feels like they have regulatory pressure on them, like with EU laws and things like that. They probably have regulatory pressure on them, but they're not even sure themselves what type of information they need from you. I think they don't even know what they're doing.
It's also a communication issue, in my opinion. And in this case, you are like talking to 10 different customer support agents who always tell you, it's the case is with a specialist. So my question, of course, is, hey guys, this is quite a large amount of money. Why, tell the specialist to call me, and then we are just going to work it out. And I can directly ask, okay, what is needed? What exactly do you need from me? Instead of just giving general information. I'm now going to do actually today, I'm going to, because this comes from a custodial wallet, obviously, so from a cold storage, and I can, sign a transaction message to prove I'm the owner of this wallet, to maybe satisfy their needs there, that this is really from me. I mean, on the other hand, who would be so insane to send like this amount of money to my account with this exchange? Doesn't make any sense, but whatever satisfied them. But it's a lesson really to check, in my opinion, and check over and over again with the exchange of your choice, how are the processes, what is needed for you in order to get higher limits, although I was under the impression that I already had the highest limit with the exchange, but it seems like 6 months ago they changed stuff and did like re-verification, which I went through. I wasn't aware that also affected like the amount of money you can exchange per month. But here I am, and I've been doing this for such a long time. Still something that I consider kind of a beginner's mistake.
I mean, it's not a beginner's mistake though. It's the fault on their end, I believe. But you've been saving up this for quite a long time. You've accumulated Bitcoin for quite a long time. We had these live streams, and we're going back several years with the live streams we're doing together. So I mean, these analysis that we've done on Bitcoin and everything, it's like it's spot on. And if for some reason you would not be able to get this money and Bitcoin moves to the downside because of them,
that's something you don't expect,
Yeah,
I'm laughing
you've
about
done
it
everything
now.
perfectly. You've accumulated Bitcoin. You're like, man, that's just insane. That's just insane.
Anyway, I'm for sure going to update you out there on how the outcome of this is. At the moment, really, I still believe, and I don't have any other reason to believe this is just really like fucked up, pardon my English, processes when it comes to things like this within the exchange. Probably also they don't have enough manpower to process all of this. It's always the same every 4 years. Like 4 years ago, when we had the bull run, exchanges were desperately looking for people to help them with the processes, for customer support, for client communication, and so on and so forth. And then in the bear market, they get rid of those people again just to face the problem once again in a bull market. It's the same story over and over again.
The problem
one
with crypto,
of the reasons, it's
not
only in crypto. Guys, I have a background in banking. I was working for banks for a very long time, and I've seen over the past 20 years that also like this KYC compliance theme has been getting worse and worse and worse. A friend of mine who works for Credit Suisse in Singapore, he said, like, if a client comes to me and says, I want to open an account, I want to deposit $1 million on it, Dirk, you won't believe the amount of paperwork that client has to submit in order to be able to deposit that money with us. This is how crazy it is at the moment. Of course, there are like bad things that happened that led to this, especially something probably like money laundering. And of course, this is like a topic in crypto as well. But it always feels like, when you want to be the one, who is very transparent with everything they are doing, who is willing to submit everything in paperwork, you are the one being worst off.
It's so stupid. I wanted to just if you can put on my chart here. I want to show you the Bitcoin chart here, and let me see. I'm gonna
look at this. The upper, it's really almost at 100,000 upper. No?
It's absolutely insane. I'm gonna go into the Slingshot indicator here, and I'm gonna add the what is this? The 20, 50, and the one. Yeah, let's do the 20 and 50. And what we see here is that. Wait, there's something not right here. That's the 20 to 50. That's the 8. Why does so I add this, and then there's other. Oh yeah, that's the high time frame one. Okay, never mind. So what I want to do here is I want to go in here and I want to add the 8 moving average, and then I'm going to put the 20. Then I'm going to put the 50, and I'm just going to go down here and remove the high time frame levels. Move that. A bit better. So now There's 3 moving average on here. It's the 20, no, it's the 8, the 20, and the 50. So in a very, very strong move to the upside, you see that the weekly 8 EMA, which is the blue one right here. So we look at the move from October 2020 last year, where you see that a lot of people are looking at the 20 EMA, which is the middle one, but that never gets tested on the weekly when it's like an explosive move to the upside. But we
Yeah.
are, however, seeing that the 8 EMA in the weekly is like the when you have a parabolic move, which this is, when you have a parabolic move on the weekly, it seems that the area or the moving average around the 8 is the one that you want to be looking for support. And then the 50, which is the lower one right here, that's the one I'm looking at as a confirmation of potentially the move ending. So you can see here you have the slingshot on here, and you can see that it nicely, holds the 20 EMA on the big pullbacks. And when you have a weekly strong retrace on the weekly, it comes usually down to the 20. But when you come down to the 50, usually means it's the end of the bull market. Now, of course, it's already dropping quite a lot, but you can see that very few times are you hitting the 50 without that really being the end of the bull market. Now, this, of course, now you did find the 50 here as support, but then slightly after it did break. So if you look at the current move that we're seeing here, move some levels here, we're obviously seeing one of those strong moves to the upside. And the 8 EMA is here and the 20 is here. So if we're looking to get in on the 20, we might not get that pullback. We might not get a pullback down to the right level. So if we add the fibs on this move, now the obvious area for a retest is the area where we have the monthly open and the 50% fib and the 618. So this is the obvious area. So going back to the question that you had in the beginning of the live stream, if you're someone who feels left out on this move, where do you want to enter? Well, I would say that everything points to this level right here, which is around, let's say, between 71 and 73, 74-ish area. Everything points in that direction. But the weekly 8 EMA is probably maybe going to be at maybe around 80 if we get that retest. If we don't get that retest and we have a few weeks of price action up here. So if this is a parabolic move from Bitcoin, we're probably expecting something like this. One move, consolidating, hits the 8 EMA, and then boom, straight up. And that means that we might move up to 100, consolidate, and then have another move to the upside. And I think that's what we're looking at. And actually, I'm also arguing that we probably don't want to see the move down here.
No, I totally agree with you. That's going to put the sentiment from extreme greed to extreme fear again, for sure.
Yep.
People are very quick to forget, especially if we should see a move lower than what was prior to this whole Trump thing, our all-time high at, what was it, like 73.5 or 74,000 US dollars. I also would be surprised, honestly speaking, since we have been all the way up also to 94,500 now, to not at least see a try to now get already over 100K, in my opinion. That would kind of surprise me, Why not go all the way? Why just go part of the way when you can go all the way? Should we then see also the price establishing itself over 100K, well, then we're quickly going to overshoot also to 100K, 110, 115K. And then we're going to probably have a large pullback. We have, and that was also one of the reasons why I said I kind of feel like I should take at least some profits here, for those Bitcoins I was talking about.
That, you did the right thing. I mean, you've been holding for, you probably added down around 20K as well.
Yeah, those are like the return on investment on those is large, let's say like this. But what I'm seeing here, and you just mentioned, so I'm looking at the 8 weeks moving average, which is the blue line here as well, because what we usually see in those market moves is when we see the price closing here, the daily price that is below the 8 weeks moving average, it tends to move all the way to the red and yellow line, which is the so-called bull market support band. Now we had a nice crossover here, which is a bullish momentum. But if we really would see a strong pullback now all the way here to, actually it is at 67,600 right now, that would make me a little bit skeptical that we are in, for a parabolic run all the way to 110, 120 or something anytime within the next 2 or 3 months. But let's see. I tend to agree with what Jonathan said. We normally have those, I call them steps, that we see in price pattern, where we see a parabolic move up, a little bit of consolidation, parabolic move up, consolidation, then normally move up. Well, here we consolidated for a long time. This is the typical pattern, not only for Bitcoin. This is a typical pattern you see on many assets who tend to have those parabolic moves. Look at the chart, for example, of Nvidia or Tesla. You'll kind of see the same patterns there. Like people are shaken out of the market, and then suddenly it moves again to the upside. The one thing is, for me now, it's like everything is very much on the news. If you follow like the after election news, especially in the USA, of course, very pro Bitcoin. You have this RFK guy who's very pro Bitcoin. You have the Minister of Finance very pro Bitcoin. Trump supposedly being very pro Bitcoin. And normally you have a drawdown then again, at least a little one, when this kind of buy the rumor, sell the news effect comes in. I might be wrong. I hope I'm wrong, really, for all of our sake. Nothing would be nicer to see us immediately going over 100K and then, I don't know, going to 160K in January, or you name it. Everything is possible. However, reality normally doesn't work like this. And if we go back here to how other bull runs were, you see, for example, here after the halving 2020 last times, we also had a phase here, where we went up to 41,000 and then crashed down to 29,000 again. This is always possible. That doesn't mean the bull market is over. On the contrary, this is normal. This is like what's shaking us out. And if we follow, well, right now it kind of seems more like we are following the 2020 pattern. But if you look here at the 2016 pattern, you always had those. Before the bull market really went parabolic, this moves up, then slumps down again, move up, slump down. I don't think really something like this is like that likely to happen anymore, because there is more liquidity now in Bitcoin. We're not talking in 2016, obviously, we were still talking about an asset that only geeks and people with a lot of foresight believed in. So the trading volume was much, much lower. Now we have institutional investors, we have ETFs, we have the largest money manager, BlackRock, in the world, who is heavily buying Bitcoin. So the story is different. I would be surprised really to see like this daily 25-30% move suddenly to the downside just to move to the upside again a couple of days later again. But I might be wrong. I mean, this rally is fueled maybe also by the low exchange reserves we see now. No, like people are more and more withdrawing their coins from exchanges, except me.
Yeah, that's very interesting. Can I add my chart, and I'll take a look at it. So this is I like this one. By the way, Bitcoin Magazine Pro. It seems look into Bitcoin is now Bitcoin Magazine Pro. When you go to look into Bitcoin, it brings up this. But this is quite interesting, because this is the long-term holder supply. So people that have been holding wallets, that have been holders of Bitcoin for long term, and I view this as could be whales, right? Could be large, really large players, and you can obviously see that there is a lot of times a inverse correlation between the tops and the bottoms. Okay, so you see that long-term holder supply is obviously going down rapidly on this move up, which makes sense. long-term holder supply goes up here. They're accumulating, obviously here, accumulating in the accumulation zone. Long-term holder supply goes up and up and up and up, and then it goes absolutely parabolic. And long-term, like it makes this is really good trading, right? This is just very good trading.
It's also interesting here when I look at this chart. Like the first thing that like my eyes see is like whenever the holding supply falls under the price, under the black line, Bitcoin is kind of entering this parabolic move to the upside.
Yes, and I think there's certain scenarios where it haven't really been great, but obviously long-term holding supply is really increasing rapidly as soon as Bitcoin is, as soon as Bitcoin is, probably look at everything all. When Bitcoin is accumulating, like you can see right here, it's accumulating, then long-term holder supply is going up. But here it never went, like it just kept going up. So this whole time here, it just kept going up and up and up, right? Here we have accumulation at 30,000. Here the lows at 15,000. At long-term accumulation kept going up, So people were still accumulating Bitcoin more and more and more. And then of course you had the tops around here is where you see long-term supply going down and it kind of aligns. But now looking at, I think I have to just reload this one to get everything. Now what we're seeing is obviously a sharp decline in the long-term holder supply at these accumulation areas that we saw. And now
that must have been like after the last all-time high that we had in March, no, right?
Yeah, exactly. So yeah. And we are seeing long-term holder supply decreasing on this move to the upside, which this is of course they're taking profits. They're because they probably bought a lot down here at the the accumulation that we've seen previously, like the accumulate, and they started buying there, and they probably anticipated Trump winning and Trump being positive for crypto, and they're most likely taking profits on that move. Just like you said, you want to buy the rumor, sell the news. That is a really, really good strategy. And this, in my opinion, was one of the most obvious ways to buy the news and buy the rumor and sell the news. So I do think that we might actually see a big move to the downside. Another thing I wanted to show you guys is, and I think this is quite interesting as well, is commitment of traders report, because it got released. So I wanted to look at I don't know, it's not released today, so we're going to look at the data we're going to look at now was released, I believe, last Friday, because I don't think it's released yet. So that was released last Friday, which means we're looking at the holders of last Tuesday. So because it gets released on Friday, but the data is based on Tuesday's holding. So last Tuesday, I want to first look at EURUSD, because that was what we analyzed last week. Not sure if I did it on this stream, but the idea here was that when I looked at the commitment of traders report last time, most of the institutional asset managers were heavily long EURUSD. And I said that if this current commitment of traders report, if it shows that they're long again, they're still long EURUSD, then I will have to kind of reassess my idea. Because I don't want to be trading against BlackRock or people like that. I mean, I don't want to be trading against the exactly. Like I don't want to be trading against the best traders in the world that consistently make money year in and year out. Like that's not something I want to do. So let's look at Euro here. Let's see what we get. Let's see. They're still actually quite now. The dealers, I think this is not the institutional managers.
I think dealers are from the banks, the ones that manage the flow of a bank. if I'm not mistaken, but I'm not completely sure. I haven't looked at this in a very long time.
But we actually do see that they're still long.
Yeah.
So the asset manager, they're still long EURUSD, which to me feels, now we don't know if this how long term this is, but even considering they were long last time I looked at this, and they're still long.
Yeah,
So,
and I think it stems from their being caught on the wrong foot right now, because you don't see this typical risk on, risk off behavior. Normally you would have expected, wow, Trump wins. This is very good for the stock markets. This is very good for the for the cryptocurrency markets. So we will see euro dollar going higher as well, because that's the natural risk on move, correct? And now, what is more important, as it seems at the moment, is like the discussion about tariffs. Good example how the markets are not trading actually very often what is happening right now, but what could affect the markets like 3, 4, 6 months in the future.
But you know what? I'm actually seeing that. No, this is actually for November the 5th. So the data has not come out yet.
That's the old one still. Then it would be interesting, of course, to see how the new one. Do you know when it's coming out? Isn't that
it
like
should be coming
normally?
out. Yeah, it's coming out every Friday.
Yeah, then it probably comes out this morning or tonight or something. It will be interesting to see.
Probably, yes. It comes out every Friday, and it's based on the Tuesday. So this is actually the same number as I looked at last time. Okay, so now I get it. Okay, so asset managers were long EURUSD into the election, because this is election day, right? So they were long. Now, if and this was my analysis, right? If the numbers that come out today shows that they're still long, then they know something that I don't know, and I don't want to be trading against them. But because it's on Tuesday. So if you look at that's going to be on the 12th. If we go to USD, and I have to reshare my screen here. If we go to EURUSD, that means that so that's going to be on the 12th. Yeah, that's here in this area. So the commitment of traders report that comes out today tells us if the asset managers are long or short euro here. Now, the interesting thing is it's at support. So technically, they should be long. Fundamentally, they should be short. I mean, that to me makes sense, because so it's going to be interesting to see. But if they are still long, then it really adds to my idea that we're going to get a pullback on the dollar.
The question, of course, is also always, are those positions you see reflected there by the asset managers? I think those can be cash that's held. No, this can be hedges against the positions. It's not necessarily like a alpha position they are building up there, like aiming to make a win with this, but could be like a hedge against something as well.
That's right. I really need to look into look at seeing if I can find more level 2 data and more detailed data on the commitment to traders report.
Would be interesting to see, but of course they don't report that on a weekly basis, like a large asset manager, for example, like BlackRock, one of their equity funds or whatever, how is their cash euro position or their spot position at the moment in that.
Well, I wonder if one could look at like level 2 data in the Forex futures market and see if it could be categorized with from what exchange it's coming from, things like that.
Yeah, but probably is possible. Yeah, I of course the question is if we can get this data like for free. I might assume that you have to pay for data access like this.
Yeah, I mean, it depends on the price, but if I'm able to look at what the institutions are buying and selling, I mean, from a swing trader's perspective, that's pretty good information.
It
because
is.
Then
absolutely, yeah. Follow the big guys. That's what you need to do. Yeah,
exactly.
All right, man. I see we've been streaming already for over an hour today, a little bit of a longer episode, naturally, because we had a lot of stuff to talk about. Quite interesting also how to see how everything plays out until next week. So, of course, we're going to be here again next week. I'm going to report on how my outcome with the exchange was, hopefully until then. And we are going to I think we should touch base also on these numbers we saw in that report just now. Could be quite interesting to see if there's a correlation, with what we see on the markets. That could be potentially quite a powerful tool, in my opinion, as well. Definitely. As always, guys, also remember, if you're watching this on my channel, to go to Jonathan's channel. You'll find a link in the description. Leave him a like, subscribe to the channel. You'll also find the link to his trading Telegram channel, new one, I believe it is. In the description of the video, so you might want to check out. There are lots of valuable information coming from Jonathan. Yeah, thanks for joining us today here again. If you like what you're seeing, leave a comment, like, and especially also share our live stream. We are doing this every Friday, and man, it's like so exciting really to do that every Friday, because there's so much happening during a week at the moment. It's crazy. It's crazy.
It really is.
Sometimes
really
you feel like, oh, there's nothing really that happened during the last week. What shall I talk about? But at the moment, it's like we could be doing this for 3 and 4 hours and still would not run out of topics.
Yeah, no, it's really, really exciting to have these daily, these weekly updates on the market.
All right, guys. So take care.